Sutherland, Senior Investment Director for Equities at Fidelity International. So I think we're less than an hour away from this RBA decision out of Australia. Most people saying it's not going to be today, but possibly August. We're going to continue to see easing.
Yeah, that seems to be consensus, right? I mean, I don't think I have an edge over what consensus is saying. But, you know...
This election, though, really brings some uncertainty.
It does, doesn't it? Yeah, so we've got the election uncertainty, we've got Brexit uncertainty, so there are, you know, it wouldn't be out of the bounds of possibility that they do decide to do it now, just to kind of take preemptive action, you know, with the uncertainty around the election. But still, the base case is going to be August, I think.
It's a long-term uncertainty, isn't it? I mean, does it really change anyone's near-term outlook when it comes to Australian equities?
Well, I mean, I think the uncertainty will be, you know, fairly long duration if we get a hung parliament, right? That's going to go on forever. It means that basically stuff isn't going to happen. You know, it's going to be very similar to what we're seeing in the UK at the moment in many ways, like great uncertainty, what's going to happen. So, you know, they may be looking to ways to stimulate the economy to kind of get us through that period.
So uncertainty in lots of the developed markets, I suppose you could say, you know, UK, Europe, Australia, possibly the US, and look at the upcoming elections. So what about emerging markets? Any better bets there?
Well, I mean, this is my favourite topic, right? Because actually, I think yes, especially Asia, right? So, you know, last week I thought it was really interesting that it was a risk-off week, right? It was a week when, you know, clearly everyone was shifting to a risk-off position, and yet we had all these Asian markets that went up. India went up every day last week, Indonesia, Philippines, China, all performed quite well. And I think this is because Asia's done this massive shift over the last decade from being a continent that sells stuff to everybody else to being, you know, a domestic demand and consumption-driven continent, which makes it a lot more kind of resilient to external shocks, coupled with all the lessons that were learned in 97, 98 in the Asian currency crisis, and much more discipline in terms of the way they manage their economies makes the whole place much more resilient. So I think, you know, if you're investing in kind of the Asian consumption story, the growth of the middle class in Asia, then that's a pretty defensive place to go and hide. And we have to remember that, you know, growth in the world is coming down, growth in Europe is, you know, going to be pretty ropey, growth of the UK may even go negative. So people will be looking for somewhere to go and hide, somewhere where there are some returns and there is some growth.
How about China then? I mean, people have been trying to draw the comparison to China and the Brexit fallout. It's pretty isolated market in many ways, but there's also the argument that there's no other country that has benefited more from globalization since the early 2000s than China. So if you look at Brexit not just as an isolated case in the UK, but as a referendum against globalization, right, China could be, you know, to the downside of it.
Yeah, that's a really interesting point. I mean, they may be lucky. I mean, they may have had 20 years of globalization, you know, at the period when they needed that, and now we're shifting into a world of potentially kind of less globalization at a time when perhaps they don't need it anymore. So maybe they'll survive because the economy's shifted now from the old kind of export-driven model to this much more kind of domestic demand and consumption-driven model. So I don't know, but maybe they'll get away with it.
Yeah. Talking about growth, though, I mean, India is now outpacing China. So what are you looking at there?
So India is our favourite market, probably, in terms of our portfolio managers and where they're overweight. So all of our regional portfolio managers are overweight India. Most people in the industry seem to be overweight India. Now, that could make you nervous, right? It feels like a bit of a crowded trade. The market is quite expensive. But what we find in India is that, you know, the growth story is clearly there. You know, Modi's reform program seems to be broadly intact. I mean, I think we can quibble about the pace of it, but the fundamental direction is there and the desire to sort of move forward is there. And we find lots of really good companies in India. That's the other thing. The corporate sector in India is really high quality, good quality managements that understand the cost of capital, understand how to generate returns on capital. So, you know, we find it a great market. And again, a lot of